Good morning, everyone. Microphone check, screen check. Looks like everything is working well across the board here. Good, good. Thank you, thank you. Welcome, welcome. See how many things I can say in double succession. Hopefully everyone is able to rest up, get ready for the day ahead and all that fun stuff. As always, before we jump in on the left side of the screen there, make sure to read through the live trade room morning prep PDF. Very important to go through and understand everything that is inside of there. All right. If you aren't a member of SSFTG or a part of the YouTube family, check out the join button below the stream to gain access before our next private webinar. Get access to the SSFTG Discord chat, not to mention the awesome badge next to your YouTube name. That way you can show your support and a boatload of other stuff. If you're trying to figure out what it is exactly that we're doing, look no further than the SSFTG Day Trading Academy, not including the live streams and YouTube tutorials and everything else. The Day Trading Academy has 19 plus hours of material loaded for you, and that collection continues to grow. Please keep in mind that the YouTube broadcast does have between a 3 to 10 second delay, and sometimes that can be longer. But if you want to level up to the VIP status, you can enjoy the exclusive permanent access to our non-delayed live analysis stream via the Zoom Direct meetings, as well as monthly VIP webinars, private VIP events, one-on-one scheduling access, the list goes on, and that is also continuously growing. So whether you're here and you're totally new or you're a veteran over on the VIP stream, welcome. I'm glad to have you here with me today. Let's take a look at some news, take a look at some charts, get things rocking and rolling so far this morning here. As far as the DP levels, don't forget to grab those. Those are posted for you on the main page. And what happened to my news calendar? Maybe we won't take a look at news. Hang on one second here. Get my news back up. There we go. As far as the news is concerned for today, obviously it is Wednesday. We have crude oil inventories today. The forecast is negative 1.436 million. Earlier news really, well, there wasn't any. There's not been anything going on earlier this morning, and there's not really going to be much going on later until 2 o'clock. So we've got crude oil inventories. We'll go to the API yesterday in a second here. But we also have the FOMC meeting minutes later today at 2, and that is obviously a huge thing to keep our eyes on. That will be it's either going to be a massive mover or a massive staller. Well, I mean, it doesn't really matter either way. I don't really want to mess with it. So the FOMC meeting minutes later this afternoon, not really something that is going to be very fun. Looking at the crude oil inventories, they're forecasted negative 1.436. If we look at yesterday, the API report came out at a negative 2.618. So as far as the API in terms of crude oil inventories, they're expected to be in line with one another, which is considered to be bullish. When they have less than expected, supply and demand kicks in, you get how it works. So they're both agreeing with one another. So realistically, as long as everything goes out as expected, we should see a negative number between -1, -2, somewhere around there as expected. If it goes obviously positive, that's going to be a total miss, and that's going to be taking a bullish number and reversing it into bearish. So that can definitely cause some movement. But right now, expecting around a -2 or so on the inventories would make sense. Get that out of the way there. Take a look at the bigger picture, see what's going on here. On the NASDAQ side of things, we've got this descending wedge that's just kind of grinding its way lower, and it was honestly looking like it was getting ready to pinch and then get another squeeze breakout. The way that the NASDAQ's been going, can you really blame anybody for looking for something like that? It just never followed through. We never got the break above the highs, and now we're breaking through the lows. That doesn't mean that the bulls have failed. There's no way in common sense history that we could ever look at this and say the bulls failed. But what that does mean is that we're not expecting this to really be a buy high type of market. I want to buy low. We haven't even had an L1 pullback since the 31st. So, since that continuation up, this thing is just begging for a dip. That first pullback zone is going to be, maybe today. We'll see. Below those 13,500s into the 13,450s or so. Now, it has been an extremely long time since we've actually gone into any type of pullback. So since we've had such a long period of time before that last pullback, well, we might just be going with a deeper one instead of an L1, looking for an L2, something along those lines. As it stands right now, still pretty strong to the upside. We'll see if they want to keep that going or not. Over on the S&P, almost an identical situation. Same thing, looking for the dip. In this case, on the S&P, that'd be back down to like 40.40. It's really about the only change. Not really much else there for the S&P versus the NASDAQ. On gold, dipping below the lows of this kind of spike in channel-ish type formation. It's certainly not the best looking thing in the world, but we do have, maybe the formation of a wedge going on too. There's a few different ways that we could draw this up. It could just be a wider spike in channel. It could just be a wedge. It could be a lot of different things right now because none of these really fit very well. The one thing that does stand out is the fact that we just haven't really had much of a pullback. We've got the lows, we've got the nice rally to the upside, aggressive L1 pullback, aggressive L1 pullback, aggressive L1, 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 L1. The only thing we haven't had is a two-legged correction back to an L2. Now, we have had, and this is what might stand in our way, we already have had a two-legged correction back, and it's almost perfect for a measured move. They just missed the L2. So be it. There's not really much we can do about that. But if they do want to go back down again, that will 100% be the area of interest going into those 1725s. On crude oil, just bouncing off the lows of support, failed to break out through the bottom underneath 58.80, reverse back up. It's pretty obvious. Buyers are trying to get this thing going higher. Looking good there. Over on the euro, running into the measured leg to the upside into the 1.19 area. Having some difficulty. Trying to stay above it for now. A little bit of an undertow, though. That can definitely cause some problems, especially if we start seeing this churn lower. It's a clue that a larger pullback may be coming. Bitcoin and Ethereum and the rest of the crypto world finally catching a very nice little pullback here. From the wedge perspective, now it kind of looks like we're dipping down to a 3-press wedge low. It was setting up this wedge. It has broken below the lows of that wedge. Same thing here. The market's been screaming to the upside. It's just sorely lacking a halfway decent pullback. So if we're looking at this from the pullback perspective, well, we're right into an L2, almost into an L3, and that's where the last time it broke out of. So there's a lot of things of interest going on here. We'll have to kind of pay attention and see what they want to do in this zone. But for now, the bears are in control. We're below the moving average clusters. We're breaking below patterns. The market's making lower highs, lower lows. There's not really any necessity to be a bull yet unless you're trying to buy low, and that's really about it. There's just not been any confirmation. Knife maybe has hit the floor, though, around the 55,600s. Ethereum, is just an absolutely picture-perfect example of a value pullback. The last pullback was a 7%, almost a little over 7.5, 7.67. Rallied back up to the highs, and the one comment that we were talking about yesterday is how these highs were so weak. And when they rotated off of the highs, lower high, dive down. Now we've got support coming into the previous swing lows. This is going to be the area where if buyers are looking to come in, they're going to be picking up into this pullback down here. This is sub 2,000. This is a major psychological pullback, and we finally got a value pullback below 7.67. It's actually gone 10. So that's a fantastic pullback. If it wants to go a little bit further, the double down would be 14%. That'd be way down to 1850. But from the look of this low right now, at least, that might be a little bit harder for them to get. Let's take a look over on the NASDAQ, zooming in from the larger daily perspective. They did break above that major point of interest. With that break above, now we've got a little kind of, what are those floating star? The word eludes me right now. Shooting star, whatever, formation on the top. A lot of sellers are going to be looking for a continuation down for a bear bar that looks reminiscent of this bull bar up. Just flip it. Right? Twin reversal style. So if they do end up seeing that type of bear response and we close the day down like that, that may be enough sell pressure to try to take that bullish leg back. And then we could be looking for that deeper push to trap those 12,600s. So today's pretty important. We need to get those buyers involved underneath the previous low of day and kick this back up. And if it does pull back, maybe come back to the Easter highs around 13,400s and then ping off of there. Either way, we do not want today closing bearish, at least not like twin reversal style. That would be a problem. On the 60-minute, we're pulling back a little bit. Nice little pullback phase. And this is one thing that I think adds a lot of favorability to the bulls, because we're not pulling back so much as just going sideways. It's stalling. And that's a good sign of bullishness, because buyers keep picking it up on the lows. And all the while, everybody's still eyeballing the lows of the channel. So the channel's kind of creeping up while the market's stalling. And you end up going sideways until you hit that zone of support, and then it goes flying higher. So today might just be a sideways range-ish type day, but we're at the lows right now, and if buyers are looking to buy low, this is going to be the zone that they're going to want to do it. Just better off more towards like at least the mid. Not quite there yet. Over on the NASDAQ 15, if we look at the cluster of volume and see what all is going on here. First off, the volume all the way from the bottom to the top, just to get us an idea as to what all is going on here, because obviously the past few days have been extraordinarily bullish. We just want to gauge what's actually happening here. Okay, so this paints a little bit of a cleaner picture as to what really happened. Honestly, all of this volume down here, creating the POC and shifting the POC down here, if we were to stretch this back, we already know what happened. That was accumulation buying. It ramped it back up. It makes a lot of sense. When it makes it back up to the highs, you would expect to see a clump of volume, right? Buyers taking profits, sellers trying to reject the highs, assuming it's going to fail, etc. It broke above that, though. And when it started breaking above it, we started seeing signs of accumulation volume. But like I always say, accumulation volume in its best form usually shows up in bulks of 3. Here's our third, setting up here. And at the moment, the market's trying to stay below this value area of interest. We haven't shifted the POC higher yet, but you can definitely see them trying to get that shift to the upside. And with yesterday and today basically closing flat, it's not going to be that much harder to build some volume around that settlement. We'll probably hang out there for a little while, and well, we're on our third bump. So a lot of shorts, a lot of traders assuming that today is going to be a little bit of a stall day or a pullback day. They're having a bit more wind in their sails. I don't really want to be a short in this overall market to the upside. I tried that. It didn't work. So with this overall movement to the upside, a lot of shorts, they might be hanging out. Like, well, okay, yeah, that's fine. Let them break lower, then come back, waiting for a little bit of excess proof. It's going to be a bit gun shy, and that's probably why we haven't seen the volume step back up yet. We'll see if they're able to hold it if they shift the POC. But so far, it hasn't happened. There we go. I was going to say, what happened to my Euro session thing? The Asian session started the overall move off with a deviation down. They found support off of the deviation, rotated back up in going into the US session. So a bit of a reversal play on the Asian session, which rolled into the Euro, which reversed it right back down again. Said, no, thank you. From that move, they were consolidated. The low of the Euro session was at settlement, which is a bit funky. But we've got our deviation move down, and like usual, if you were to kind of eyeball this is about a 1.5 deviation move down from the Euro session, which is typically where if they're going to try to reverse things, that's going to be the point of interest. So buyers want to see these lows hold pretty aggressively going into the open, and if it starts cracking down, then we're likely going for the double deviation, which would be lower 5/18s and potentially even 3 down at the 488. I mean, from the 15 going down to the VVP, there was a very obvious VVP that's resting at the -0.5. When's the last time the NASDAQ's even seen a -0.5 DP? Like, I feel like that's going to be pretty favorable if it dips down to that point. And there's an even bigger VVP cluster, or lack thereof, at around 13.4. We'll see what they want to do. What is going on with my indicators? All of my indicators on all of my charts are messed up. I'm going to refresh all of my charts real quick. It's saying like the bar timer's not active, even though it is. Okay. These are all probably messed up too, right? Ooh, crude oil. Big flush back down to the lows. Now, this is an area where if buyers are going to be looking for it to hold, they're going to want it to hold in this zone. From a swing perspective, what kind of risk are we talking here? Golly gee willikers, Batman, that's a 2.5% stop. 144 ticks, eh? That sucks. So, from a futures standpoint, it's a little on the extended side as far as crude futures go. But from an option standpoint or from stocks that are very closely related to crude oil, this is going to be an area of interest. So a zone of interest on crude stocks, crude ETFs, etc. They're going to be floating around here. The only problem with futures is that you're dealing with a 144 tick stop. If you're okay with that risk, then cool. If not, I don't blame you. That's a little bit of a toughie. Starting off from the top of today, we've got an L4 rotation lower. L4s typically rotate off L1s, which this one did. We've got another continuation, which missed. Now they're trying to pull back again. This would be the L1 that sellers are going to be looking for as far as continuation goes. Looking at the volume from top to bottom. Wow, that's something. Let's try just this most recent move higher here. What's going on there? Not a whole lot. Good Lord. All right. Well, it might be better off just kind of waiting then. That is some nasty looking volume. I was expecting a little more info or something, you know, not just a paintball extravaganza of splatter marks everywhere. From the S&P perspective, on the 5-minute chart, looking at the way that it's going into the open, we've got sellers really trying to extend this move lower. Maybe the S&P gives us a bit cleaner volume. Maybe. Let's see what they want to do here. The Asian session didn't do a whole lot of anything. They extended a half and just reached out to a 1 deviation move. So they're not getting a whole lot going on here on the S&P. As far as continuation down from just today, it's an L5 rotation down, which bounced all the way back to an L4. It's the S&P. Typically, L2s, L3s are going to be a little bit more beneficial. And an L3 lines up with settlement back at 4,064 quarter. That just makes way more sense. And with this reversal back up, I don't know that I want to be the first one to the party on the short side for obvious reasons. Really more what I'm looking for today than anything else is waiting to see the shorts try and then get annihilated. That's what I want to see, because then I can go long. That's all I'm waiting for. We know the bigger picture, right? If we encompass the previous move from top to bottom, eventually. There we go. We've got that big chunk of volume, and then it was nothing but profit taking on the way down. Once they hit the lows, that totally shifted gears. Right? So if we draw this a little bit further forward, we can see that volume cluster built up right around where they had that previous VVP, a little bit lower around where they were already building a POC. So if we extend this further, you can see a cleaner picture before it broke out to the upside. What ended up happening? We saw initial profit taking on this drive down, but once it started forming higher low, higher low, higher low, higher low, trapped on the lows, reversing back up, POC shifted down, clean sign of accumulation, and it started rallying back to the upside. And as soon as it proved it by breaking above these highs, we've got higher high, higher low confirmation. And, well, I mean, it was pretty obvious. Now, this is extreme. You don't expect that every time. But, you know, would I say that sellers are stuck in here? I mean, maybe if they are stuck, they're going to be stuck originally down from like the 850s. So if we start from the lows and kind of work our way from that point, looking for the sellers who were building in here, looking for that next leg down, and they didn't get it. When it started reversing back up, what ended up happening? Well, we didn't see those sellers start coming in until now. Now we've got the signs of accumulation. So if we stack these 2 points together, we've got a POC here and a POC here that gives us an average of in the middle, right around there. That would be about a negative 1.5 DP move. That would be incredible for value buyers. Could you imagine seeing a negative 1.5 DP move today? Good Lord. Panic in the streets, everybody on the retail side dumping their contracts while Goldman's sitting there on the sidelines sweeping them up. Like, yup. Yes, please. Maybe. We'll see what happens at L2, but I mean, you can really almost taste the move happening. Well, I don't know. We got 9 minutes until the open. So from that perspective, obviously I don't believe the sellers to the downside. On the S&P, this most recent move, the first short are even less likely to actually make it happen. So I'm okay looking at 59 quarter in hopes that those sellers will try to trigger in short below that previous bear bar, and it's just a failed attempt and it rotates right back up again. If they are able to succeed in a little bit further continuation, it's likely that their profit targets will be a point away down at the lows, 48 quarter, and doubtable that it goes below that, but the next major zone of support's at the low. So on the S&P side of things, looking to play off of sellers attempting to continue a downtrend that might not necessarily exist. But if we don't, again, from the daily perspective, if we don't start seeing support showing up below that previous low a day, and they start losing their ground by too much, then we could very easily slide all the way back to that L1 top. And that's at, for the NASDAQ, 13,360s, 370s. See which way they want to go. Kind of re-gauging what's going on here from the sell perspective, at least. They had that at L4, and it did follow through with an L1, so I have to give the benefit of the doubt to the sellers that they're going to try off L1s or L2s. But if there's not much resistance here, we're seeing initial sellers coming in the L1s, but so far, it's not working so great for them. If it starts really slamming through this L1, then we might start seeing signs of failure at the lows, and that's, again, I want that deeper dip, but it just might not happen. NQ equal moves up and down from the ETH open price. Yeah. I mean, it's just a big balance. Yesterday, what was the difference for today? It wasn't much. It was like negative 0.41 or something like that on the NASDAQ. And the S&P was, or no, NASDAQ was 0 and the S&P was like 0.04 or something. I mean, there was no difference. It hasn't really gone anywhere. We are in a perfect balance, almost. Well, I don't think the S&P is going to snap down and give me that entry. We have an inside bull bar. I'll creep it up in anticipation that it's not going to trigger, just to make sure that, you know, first in, first out. I'm not SOL. 59.5 below the lows would be the zone of interest. See if you can kind of climb up from there. If it goes bear engulfing right now, that's honestly fine. That doesn't hurt my feelings at all because I disbelieve a bear engulfing even more. 5 minutes until the open. All right. Pretty big clue now that sellers who were trying to sell in the L1 have been ran over. So the first pullback here, knowing what kind of market we've got going on, if these sellers are getting ran over and we start seeing this pierce into the L2, that would be a clear indication that those sellers, if given the chance, will probably start jumping ship at break evens if it comes back down here towards the 5350s. I don't think sellers were expecting it to pull up this hard. The NASDAQ move up and down was from the London 3. Oh, okay. Gotcha. All right, we're getting a test of the L2. Sellers tried. We've got 2 minutes, 9:28. Is 9:28 going to be the factor that runs the sellers over? Uh-oh. See if this starts cracking above the L2. Buyers are going to be looking for a retest back down to the L1s off of 549s all the way down to 543s. They didn't break the top of L2. So the bounce off of the lower L1 here might not be as strong. Watch this pullback here. As soon as it starts getting closer to that L1, that's going to be where the shorts were trying to get in short, and that's going to be where they're going to want to get out of break even if given the chance. 1 minute until the open. S&P, I'm obviously not going to get anything, so I'm going to cancel those. I'll wait for the open. Get a little closer into the action here as we get closer to this L1. And just because we are going into the open and this thing can be real snappy, I'm going to throw those orders out there just in case it gives a quick little flush at the open. It's a nice strong bear bar, so sellers will try to take that lower. As far as the reversal play back to the upside, 2-to-1 actual risk puts the first target at 60 quarter. So that will be the first target. Then from there, the next objective would be to see it try to climb a bit further up towards like the settlement price, honestly. S&P continuing to climb at the open. Two-to-one objectives are sitting, again, right around like the 60 quarter area. That was based on the actual risk. Let's see if they can get that done. There we go. 2-to-1 actual risk objective taken out. A lot of times after those 2-to-1 tests, you'll see them pull back and they'll kind of mess around with a break-even point. So if we see support at the break-even point, that's fine. Then I'll look for more continuation to the upside and see if this wants to go back up for that larger target. But if it goes back down to break-even, it'll probably bounce there for a second. But if it starts cracking through it by too much, and we can't find support underneath the 40s, the 38s to get it to go back higher, then chances are the buyers are going to start jumping ship expecting a lower low. But putting a stop to break even or anything even remotely near break even is very likely going to get taken out because that's just the kind of thing that happens. Now, if they do break another high, and we start continuing back above the 61s, 62s, and we start climbing up, a bit closer to that objective, then sure, that will change things a little bit. But for right now, we're just kind of fighting over this previous low, and my entry's below that. So I don't want to put my stop to break even. That just seems like a really stupid place to put it. There's the break-even poke. Still messing around with break-even. They closed underneath it now. See if they can get a little bit of a poke down here. There we go. This will be the next zone where buyers will be looking for a continuation move back up. And they were able to break through the lows. So this is going to hit a lot of stops on this initial breakdown move. If buyers are going to absorb it, it'll bounce back aggressively. If they're not going to absorb it, this is where you're going to see it slide back to a little bit of a larger support. This is where you're dealing with the first 5 or so on the NASDAQ. The rest of the market says up. All technicals say up. The NASDAQ says, nah, I'm going to grab some stops first. Look at where we are in the 15 as well. This is the line in the sand right here. So from a swing perspective, am I willing to give up on the long? No. Small little consolidation. This is their first attempt to try to break out of this consolidation. What a lovely bear bar that was. Great success. S&P, now that we've got the first couple candles in here, let's see where that first volume is. Not sure we're actually going to see that first volume again, but we'll throw it on there. 75, 61.75. And for the NASDAQ, oh, that chart's messed up too. For the NASDAQ, the first 5 is there. That's going to be at 125. Crude oil on that pullback move isn't really proving a whole lot. But, I mean, we'll see, I guess. Given the distance that it slid down, I'll look for the first objective at a scalper's just to get the probability back up a little bit further so I can swing off the final one. That will put my average a lot further down as well. S&P continues to go further up, breaking above the next 5-minute bar. A little bit of an undertow forming here on the lows as well, which I don't think is much of a surprise. Big bear bar came right after when I was short in reverse positions. Of course, that's how it always happens. Welcome to my life. At the moment, I'm not really interested in increasing risk too greatly just because we don't have... I mean, yeah, we could utilize like a 3-press low from yesterday. I just don't like using yesterday's price action when we're talking about like tick time frames. We're obviously in a major zone of support on the larger time frame, but from the faster perspective, it hasn't really had that turning point, so it's still very early. You have to be on a swing trader's mentality down here. In the sense of low probability but high reward. Chances are you're going to be wrong, but if it works... S&P continuing to rally. Oh, were you serious? I saw a winky face. I'm getting mixed signals now. If you were serious, then obviously my response would have been a little bit different. Sorry if it sounded like I had absolutely zero heart and or soul. I didn't mean it that way. I saw the wink face. I didn't know you were serious. I apologize. That sucks. Have enough to rebuild it, but it'll take time. Yeah. Every great trader is blown up in account. An? Singular? Oh, man. Oh, yeah, definitely more than one, yeah. Bulls trying to get more continuation to the upside. This is their last ditch. If we start seeing them churn back down through those 520s, I'm not going to hang on to it much. We're getting through the break-even point. This is where I really need to start seeing them churn back up again. If this was truly a trap, then I need to see the bulls start ponying up here a little bit. I'm going to reduce a little bit more around this area. I am not liking this price action. If it goes much lower than the 59s, I'm not going to hang on. If they're going to be vindictive, that's fine, but I need them to go. Okay. See if they can get a bit more continuation. There we go. Now 51 quarter is the volume node, so if they're going to pull back, this is going to be the area that they pull back, yeah. All right. So vindictive NASDAQ playing its games at the open. That's what I get for breaking all the rules. Too many contracts for the account size. Let that be a lesson for all. Yeah. One big thing, obviously it's always easier to say in hindsight, but I think everyone has to kind of unfortunately go through the experience, sometimes multiple times. It doesn't mean that it's any fun, but you know, the one thing to keep in mind is that even 10 years from now, while you're trading, you're still going to have situations where you're going to break rules. You're human, right? So don't rail yourself too much. It's part of the natural progression, but there are a lot of things to be learned from it. One of the big things that some brokers do and some don't is set a max loss profile on your account. So if you call your broker, you can tell them, hey, if my account ever goes down so and so, whether it's percentage or down, every broker is different, but they can usually set up like a cutoff point. And be careful when you start back up again too. Psychologically, it's not going to be very easy. It might be better, just, for personal opinion. I can't tell you what to do. I'm not a financial advisor. That's why that little thing is in the bottom right, and we go over this stuff every morning. But it's, it might be better to start with like micro and work on really small, maybe even like one share on the SPY or something, just to kind of get back in the groove of things. Well, maybe one share if the... Okay, cool. Yeah. I figured, but, I know other people are looking and watching and looking at how I respond as well, so... Just a few things to think about, because we've all been there. I get ya. I get ya. More continuation back to the upside. They vindicted me out even on my trail to try to hold it. More continuation up. Lots of wicks starting to form, even on the S&P. A lot of back and forth. Now follow through. I noticed on the market analyzer that the NQ and the MNQ doubled in volume at this accumulated area. So maybe this is a bottom. That could be, and that's definitely something to consider. But keep in mind, it's also the open. So seeing it double in volume at the open is also kind of expected too. So it's a give and take, you know. The S&P can churn underneath the previous bar. Again, I know, asking for a pullback. God forbid. See if the S&P can break below a previous bull bar and try to get this going back up. We are seeing that positive holding below the previous low of day on the daily, right? Over here on the NASDAQ. Buyers so far are trying to kick this back to the upside. That's a good sign. This isn't that giant bear bar that we didn't want to see, at least not yet. So they got a shot. But if the sellers start holding them off at the L4s, L5s, that can definitely cause some problems. Oh, yeah, for sure. Yeah, take a break. Have a good one. We'll see you tomorrow. So far, it's just one giant leg back to the upside. And this is kind of the NASDAQ playing catch-up now. They got that stop run through the lows. They nailed everybody on the bottom. Now they got that rotation back to the upside again. NASDAQ playing games at the open. The only thing that is really a concern now is the L4 stacked on top of this settlement price. That could cause some problems. So far, the lows are holding. Crude oil's not doing, and nothing's moving anymore. Ethereum's back above 2,000. It's starting to look really very similar to a V bottom here. Crude's hovering in the zone of support still, not really doing much of anything. One thing that they do have going, although very short term, bullish divergence a little bit. Yeah, FOMC is later today at 2 p.m. That makes it even more fun, huh? Jeez. One of these weeks we'll catch a break, you know? That magic unicorn week where the news that it does have isn't so impactful and there's no holiday or anything. Man, what a nasty little trap that they just pulled there on the lows of the NASDAQ again. Anybody who was trailing their stop up and saw this new high and thought, yeah, it'll be safe now. Nope. Not in the NASDAQ. Come on now. A one tick new low. Possibility that this, you know, again, I really dislike the fact that they're holding the L4 right now. Out of all the places to hold as resistance, this is not a great spot. We're also back to European session. I know it's kind of hard to see with all of the extra lines, but the European session was directly on top of settlement. Inside Doji. I mean, I'll go 66 quarter. I'm not going to buy it one tick underneath. This is too slow for me to want to do that. It might mean that I missed the trade. There will be buyers at 67 quarter, but with as slow as this thing is, buying underneath the first candle makes a lot of sense. I just don't want to be the first one to the party while it's stalling out like this. I think out of all of the locations for this to stall, this would allow sellers a little bit of a bigger pullback. So 66 quarter from like a greed, give me the best entry possible, I think makes a bit more sense. NASDAQ going back up to the highs, though. That might mean that the S&P is not going to get it. It went down to 66.75. Testing settlement now. That's also the European session test on the NASDAQ. So the first time the market has reversed above a previous major swing. And if we follow along the same mentality, the same thing just happened over here, although they were successful in breaking down again. This time around, we see sellers trying very vigorously in the L1, and they get dumpstered. The L2 sellers try and try, they get dumpstered. None of them have been given a chance to get out of break even. Now they're starting to chop through the L3s, and they haven't been given a chance to get out of break even. So the first pullback is going to be pretty interesting in terms of buyers coming in, both sellers who feel like they're stuck and buyers looking to buy the dip, all of the above. That's a heck of a bear bar on the top. It's only a 500 tick chart, but I find it challenging when the daily percent hovers around 0. There's no clear bullish, bearish, so to speak, like what the NASDAQ's doing today. Yeah, it's tough. Effectively, you have to deal with this back and forth where you've got to zoom out a little bit and look at the bigger perspective. Even a 5-minute can help with that a little bit, especially if you're used to looking at a 500 tick. But if we look at what's going on in the bigger picture here, I mean, really, it's plain as day to see what's going on. Buyers are buying underneath the lows. That's all that's taking place. They're just trying to buy as low as possible. Maybe they're buying underneath the swing low. Maybe they're buying on an L2 or the bottom of whatever. They could be any number of reasons. Maybe it's a wedge low, whatever. But either way, buyers want to buy down here. They didn't want to buy up here. So down here, if they're able to buy, which is why I didn't want to get rid of my long. Remember me talking about that? I don't want to get rid of it because the major zone of support, unless it starts losing it here, then it's game over. That's why, because this is the last line of defense. And typically the last line shows up with their best defenses. If it's going to hold. And in this case, it did hold. If it were to break through, then it would be a very obvious breakout point where you'd probably have one giant bear bar down, and all the buyers who were long waiting for that, they start flooding out, and then you see the stop run. You might get a little bit of a bounce back up for some higher low, smaller loss exits, that kind of stuff, but that's the line in the sand. So as long as we hold above the lows, 511.50, regardless of where buyers get in, whether it's here or whether it's a higher low pullback, or whether it's, later in the day up here, the stop goes in the same spot. It's down here. Probability's up to you based on where you want to find an entry now. The objective is for this to roll back to the highs again, at least get back up into the inside swing, preferably above a new high. Maybe, if it really wants to hit the gas pedal, to a wedge top way the heck up there. So yes, it is a range, but if we zoom out and gauge a larger perspective, it's a buyer's range, if that makes sense. They're still holding inside the L4. We've got like 10 seconds left on this candle. A bear bar close, buyers will be looking to buy a bear bar on the close. $67 quarters, 66 quarters, 65 quarters, 67 quarter objectives would be 68 quarter. But if they want to go further, That would be based off the risk. It still puts it at 68 quarter. There's no change. Oops. No, go back up. Crap. Well, so much for first in, first out, John. Way to wreck that one. Whoops. And that's why I don't get fills most of the time. Are sellers trapped on the 1 hour NASDAQ? On the 1 hour NASDAQ, I mean... So this is where it comes down to personal choice of what you want to perceive as a trap, okay? Because really the signal bar at the top is terrible. There's not going to be any sellers who want to sell that, right? I mean, it's just too strong of a bull bar. It doesn't make any sense. We get the actual bear bar down, and sellers may choose to sell that, and their follow through was horrible. But when it came time to go higher, it didn't stick the landing and close back down again. So those sellers, are they stuck? No, I think they're okay. There are more sellers who probably jumped in once it got a little more confirmation here, or even below that bull bar, because that's halfway decent too. The only sellers who would really be stuck would be the ones down here. And they got absolutely thrashed. So if they're stuck, it would be one tick below the low of this as a signal bar, which would be 30. One tick below. So 13,530 would be their price that they're stuck at. There. That would be where the shorts would have gotten in. One tick underneath that bear bar. S&P still waiting for a bit more up to the 68 quarter. Still hanging out. Bulls on the NASDAQ trying to break above the L4. Do you ever swing trade on the ES? If I were going to take an ES swing trade long, it would probably be on the MES, just so it doesn't hinder my ability to scalp on the ES. And as a swing perspective, I would much rather allocate like option capital or something that's a little more detached, so that I've got a bit of wiggle room in case the market goes absolutely ballistic on me, and it's not so expensive, you know. It's easier to manage your risk from a longer term perspective, in my opinion, on like the ETF or the option side of things rather than the futures if you're not going to stick with like micros or something. Now, if your account's big enough to handle the risk on the full size, then it comes down to psychological preference. $66 quarter testing, but no fill. There we go. 67.75 would be the objective. And today, honestly, is a really good example of exactly what I mean. Like, from an options perspective, if you were buying into this dip on futures, you saw how much risk you had to take on. If you wanted to stay in the long. Right? I mean, it's not easy to, especially at the open, to stomach that kind of stuff. And that's just one of the factors of futures. You know, it's not that it wouldn't have dipped like that on options as well. It would have, but the impact would have been less severe. I mean, it depends on how many contracts you buy, I guess, but generally speaking, at least the way that I trade it. Fills the second area of interest. Now the point of normal contention would be back to break even, but 66 quarter. I like 67. I think buyers are trying to push back to the settlement, if anything. Previous entry defense point from buyers who are buying on that bull bar at the open, that's going to be at 63.75. Then, of course, there's volume below that at 61.75, but I don't think that's going to be necessary. Gold starting to see a bit of a reversal move on the 15-minute. That's a heck of a candle here. I mean, it's very early in the candle, so there's a lot of time, but geez, when you get that big bull bar trying to break to the upside, and then it gets ran over like that, that's a problem. It is very early, so a lot of shorts who may have been stuck in here or trying to short in this congestion might be utilizing this pullback to get out of break even. So it could very easily bounce right back up again, but it's definitely something to pay attention to. I'll take 3 at the point and try to hold the last one to the high closes. Makes a bit more sense, though. Probably at 68. Testing the L5 now on the NASDAQ. Testing 67, but no fills. There we go. Final objectives a little bit further up. 66 quarter to protect a point and look for the highs at 68. Yep. Taken out on the last one, of course. And now that I'm out, this is where it goes 7,000 ticks to the upside, right? Oh, that's the NASDAQ, my bad. Wrong one. Crude oil bulls trying to kick the market back up off the lows again. Still holding in the L5 as an area of resistance for the sellers. Yep, there goes the S&P. And this is something that adds a lot to the bullishness here. Whenever you have that, I mean, we were already kind of talking about how they blew through the L1, blew through the L2, blew through the L3. They start getting into the L4 and then begin chopping above that. A lot of times when there's that much pressure, a lot of sellers will exit when it returns back to the L3 and just call it a day. So given that there was a really strong response there and we're seeing this continue back to the upside, it's got a bit of a better probability now that we're going to start churning back up through the highs of the European session into a new high of day. That adds a lot of conviction for longs to continue holding. Especially more on like the swing perspective, the options, etc. They're looking to see what happens in this zone right now. Big old bull bar to the upside, 69, 68. Let's buy a little inside pullback here. 67 wouldn't hurt my feelings. I think buyers are interested, but they just don't want to buy above this bull bar if they don't have to. And given that we haven't triggered that bull bar, I'm going to reduce even further. 66 is going to be the first. Come here, you stupid thing. 66, 65. $64. It's greedy, and I might not get the entry, but, I mean, if they can get back into the wicks down here, that would be incredible. Doesn't mean it will. And the micro perspective, because sometimes the micro will give us a cleaner idea from from the psychology side of things, at least, as to what's going on here. So from the top to the bottom, jeez, absolute train wreck. It was an accumulation phase to the downside, broke underneath with distribution, then started rolling higher. So when it started coming back up, sellers are starting to pressure in, and now they're just getting ran over. So we know sellers are stuck. They built a lot more in the 70s. Couldn't get the wicks. Came close on the S&P, but not quite enough. It only went back to 67 too, so chances are it wouldn't have gotten a fill anyway. Still sticking that daily pattern to the upside. It's got 7 hours left, so. Crude oil starting to show a pretty nice candle here. They've got about 20-ish minutes until inventories. Remember, inventories is anticipated to be bullish, and the fact that crude oil's at the lows, swing traders might be trying to find some value longs down here to hold on to through inventories. It would make sense. Ethereum back to 2,000. Still has a minute and a half. We're running a little bit low on the clock right now. All right, I'm going to cancel my longs on the S&P. I don't like the fact that we've only got a minute left. Too strong of a bear bar on the top would be a bull failure at the highs, which may suggest a deeper pullback, probably to volume. That would be at 61.75. I'm less inclined. If there were like 3 minutes left, sure. Then we'd have time to hit the lows, bounce back up, and then close bullish. Fine. But now, there's only 50 seconds left. It might still do it, but it's going to be a lot harder. All right. Pretty weak bear bar that doesn't really prove a whole lot, and doubtable that sellers are going to want to try to sell underneath it with any conviction. I'll see if I can pick up a low underneath that 66.75. That'd be the next zone for scalpers to try to pressure back to the upside again. They're not going to do that either. Come on now. The NASDAQ in this L5, I gotta say, is starting to make me a bit nervous. The follow-through on the top is getting pretty weak. What's the volume look like from bottom to top at least? Yeah, they're trying to build an accumulation phase into L5. Looks like they tried to do the same thing into settlement, but it didn't work, though. So if it starts churning above this, that's even more sellers who are stuck. NASDAQ breaking above the highs. Which is awesome and a bummer because that's pulling the S&P up. The S&P came one tick away from the entry point. Back to European session highs. Trying to churn higher now back through the European session highs. That would be the reversal above the high of day. Technically, it reversed above the high of day. It only went above it by like a tick or two, but if they can follow through a little bit more, that would be a very strong reversal to the upside. It didn't even it let nobody out. So the first pullback of substance will likely be back to an L1 if it breaks above the highs with aggression. If it doesn't, then the pullback will probably be a little bit deeper. That's where we can utilize volume a bit more. If it's going to pull back based on volume, it would make more sense around 560s. Well, actually, those 585s look pretty nice too, but... And now, same problem. I can't go long on the S&P anymore. There's not enough time. And things are slowing down a little bit too much. So let's do some question time here, and then we'll wrap it up. Keep an eye on if the markets want to wake up a little bit more above these highs, but I'm not liking how weak of a top break that was. Jeez, look at the NASDAQ now. A little bit of a different perspective. Freaking trap on the bottom. We are on gold back to the underside of the wedge. That is also Right alongside falling resistance. What a nasty spot here on gold. It's going to make it a bit tough here. S&P, it's a nice trap on the lows. A little inside pullback would make a lot of sense. Back to settlement. So swing buyers, etc., looking for the inside pullback. I mean, it's FOMC day, so there's that consideration as well, I guess. On the crypto side, it's just a beautiful flash on the lows. This is the BTFD. EOS had a bit of a brick wall that built up at almost 7. Unbelievable how incredibly high that thing went. Ripple made it over $1. I mean, what? That's bananas. The big one that still really has my attention is Uni. Now more than before by a long shot. Look at it from a value perspective on the 4-hour. Not only they did fail to get the breakout to the upside above 31s. So from that perspective, that was a failure. But from a value perspective, they just dipped right back to the POC and look at the response so far. I mean, lordy, these 28s, 29s, this is a big zone of interest down here. You really wouldn't want to see them break through the lows, but the upside objective back to the highs is easily 2-1, so it's still very favorable. Ripple made it up to $1.11. Unbelievable. And you know what's even more disgusting about it? Aside from the fact that it's Ripple out of all of them, you know, my feelings on Ripple. But it went up 100% from yesterday. It was at 60 cents yesterday. Actually in the 50, what was the low point yesterday? 54-ish? 54 and some change? Oy. Does Coinbase trade Ripple? Can you trade Ripple on Coinbase still? Or did they stop that? Or what happened to that? What a mess. So you can't trade it on Coinbase. Yikes. So coin market cap. Let's see where this money is coming in from. Mr. Ripple. What markets are pumping cash into you? Binance. Confidence moderate. Huobi, well, I mean, Huobi Global is putting in some decent volume too. XRP, BTC, I mean, it's all Binance and Huobi Global. Bitfinex, after that, it tanks in volume. Hey, Anders, how's it going? It was all right today. I got the initial bounce off of the lows looking for a broken L1 that rotated back to the highs for the 2-1, and then it just dumpstered through the bottom. Of course, if you look at the timestamps, it's 9:33. So kind of expecting it to be a bit vindictive instead of taking the loss on the secondary portion. I ate a little bit more into it, so the reversal back up. But it took my trail. You can see where it took my trail out, right there. Story of my freaking life. And then this. But I'm not, I mean, we knew it was going to be vindictive. It's at the open. NASDAQ doing NASDAQ things. Rotten SOB, you know, okay. Rolled back to the highs. That's about it. Caught a couple little dips on the S&P, but Not too crazy. Still don't have a huge amount of volatility. I mean, it's hovering around open. I mean, it's basically a 0% with a range on top of it, you know? Like, the market's not really doing a whole lot. And FOMC later today, that helps. Going on 10:20, 10:30 around the corner. Let's get those questions in. We'll head off into training time. And then we'll wrap it up. This is too slow, getting too late in the day for FOMCs. Not really willing to do much else. Crude oil inventories around the corner in 9. Give me 1 second. I'll be right back. All right, I'm back. Sorry about that. Got about 6.5 minutes until inventories for crude. Not much else going on. What's the average ROI per month? It depends on the approach, and it depends on which market. It depends on a lot of things. Some weeks are a lot more scalping, so the ROI is a lot lower, typically closer to like 0.5 to 1, but the probability is a lot higher. Whereas like option trades, I'm usually looking to hold on to those for a lot longer. Those are typically, 60, 70, 80, sometimes more. It just kind of depends on what the approach is and what the overall mentality is. Depending on what the market's doing, every week can be different too, so let alone going month to month. Market has a hard time figuring out what it wants to do from day to day these days. In the long run, I typically average close to like 0.8 to 1 to 1 or so. So as far as an ROI perspective, 1 to 1 is usually like long-term average between all the swings, everything. It's right around there. But that's a wide range of them. Crude oil trying to churn back lower again. Ethereum struggling around 2,000. Just nothing happening. All right. Well, I'm not seeing any other questions coming in, and I am not interested in anything else on today with FOMC day and crude oil inventories and a million other things going on. So not, no. 1-to-1, how much is that in percent? Well, I mean, in terms of percentage, I guess it depends on the account size that you're trading on. Typically, if we're talking like larger build-in, like 1 to 2% with a risk of like a 0.005, like half of 1% for a gain of 1. But if the account size is much smaller, obviously you're not going to be able to get away with a 0.05 risk percentage. That's just not going to happen. So depends on the account size significantly, but I don't know that I would want to see a risk over, I mean, definitely not over 5%, which would mean that your gain should be at least 5%, if not 10. You can see how that's extraordinarily dangerous. But I try to keep things a little bit more realistic in terms of the overall like ROI on the account, like 0.005 in terms of risk for half of 1% risk, 1% gain. Low risk, long term. Well, low risk relatively. All right. Well, that'll do it. Enjoy. Rest up. You'll be able to watch the recording back basically as soon as I hit end. I think it just pops right up after that. So aside from that, that should do it. Keep in mind, today is FOMC. Be careful. That happens later today at 2 p.m. Eastern. So just play it safe, right? It's FOMC day. We've got inventories in a couple minutes here as well for crude. If you're a crude trader, we'll see what happens. There's a lot going on in that. But otherwise, I hope you had a great day of trading, and we'll see you all tomorrow morning, right? Have a good one. We'll talk to y'all later. Thanks.